Greetings, salutations, everybody. Steve, how's it going?
Hello, it's going good. Hello, thank you. Hello, Jamie Scott.
Hello, hello. Thank you as well. Welcome, everyone, to the November 20th office hours. Hopefully, everybody can see Mr. Albert up there on the board. Looks like everybody can hear as well. So, before we get into the fun stuff, let's just take a quick pause here and make the lawyers happy. Just want to make sure that everyone that attends these webinars is familiar with the routine and how we share a lot of information with you, but that is for educational purposes only. If you need investment advice, people telling you what to buy and sell, how long to hold things, that's not what we do here. We just provide educational content. So if you do need somebody like that, please seek out a registered investment advisor or some other licensed individual to help you out with that type of stuff. Okay. And also, too, for the regular attendees, please bear with us. We like to make sure that if you're new, if you're just attending one of these webinars for the first time, that you have all the facts. And the facts are the following. Yes, we do have the best scanner out there if you trade the U.S. equity markets, hands down. The only one with artificial intelligence, that's for sure. But we also have built quite the community around that technology. You'll notice at the top here, we've got a trading room hosted by Barry Anderson. It's free. Yes, it's free. You don't even have to be a Trade Ideas subscriber to get in there and enjoy the benefits. So if you haven't been taking advantage of that resource, go ahead, get signed up and do that. Of course, myself and Steve host Monday's office hours. Steve takes control tomorrow with the Trade of the Week. Andy Linloff rides shotgun with him. Wednesday is a little bit different. We have a general Q&A demo. Bring in Dan Merkin, the CEO. Brad Williams is the Chief Technical Officer here at the firm, always entertaining. Andy is going to round out our hour-long webinars that we do Monday through Thursday with his trading studio, and I ride shotgun with him. I'd like to change things up a little bit on Friday. It's what I like to call Free for All Friday. It's a 3-hour webinar from 11 a.m. to 2 p.m. Eastern. So anything trade idea related, or trade ideas related, I should say, just come on in there. You can get the invite sent out to you, and it's myself, Steve, Andy, sometimes Sean's in there with us as well. So you got 3-4 guys in there, all willing to tackle your problem simultaneously. It's been getting good reviews thus far, so come on, come all.
Shortened week though from the holidays, so that Friday support session and Thursday will return next week.
Just like I keep thinking it's 8 o'clock in the evening when it's really only 4:30, I also keep forgetting that the holidays are upon us. They snuck up on me. And of course, since our AI, and by the way, Steve, it's about to be Holly's birthday pretty soon. She's going to be 2 years old. Right?
How old is that in AI years?
Well, let's say at least 20. 3 more years than dog years. That's the formula. Dog plus 3.
All right.
All right. Okay, so what are we going to talk about today? Well, if you attend on the regulars, you probably notice, hey, these guys talk about the same stuff. The same techniques keep popping up, and you're right. You're right, because what we're showing is consistently working, right? So until it stops working, we're going to keep showing you this. I like to refer to it as a compulsory or more of a methodology which leads to good trades, right? Something that's repeatable, that's a good thing, right? My funky golf swing, I can't repeat it, that's why I'm terrible. But hopefully I have aspirations of one day being able to repeat the whole thing consistently. Yay, all right? Keeps me coming back. So if we apply the same methodology to the markets, well, we stay a lot saner, and hopefully at the end of the month, we're actually green. So I guess it's time for me to pass the baton over real quick, Steve, and let you let everybody get a taste of your technical wizardry here. So hold on.
Why not?
And there you go.
Okay, so we'll start. All right, let's go to the daily chart here. We'll start by taking a look at the S&P, SPY. Once again, gosh, this always needs to be adjusted, it seems like. So I'm going to put that back kind of in line. This is a very long trend line going back for a while and touching many points here, here, and here, and here, and here, and here, and here. We broke through here where I previously was bearish for about a week, and then was popped back above that line, bounced back, held the trend line again here. Well, the trend line continues to move up. The price action is kind of moving sideways. So, I mean, at some point, either the price is going to pull back to this trend line, or the trend line is going to catch up to it. But that's the gist of the trend of the S&P 500. Now, today I found it kind of interesting. This was the only one of the major indexes that did this, but look at on Friday. Friday, we had an inside day. The high was below the high of Thursday, and the low was above the low of Thursday. Today, Monday, we also had an inside day. So we've got a double inside day kind of going here, a little bit of a wedge action. The high didn't quite reach Friday's high today, nor did the low quite reach Friday's low. So kind of a little spinning doji here. Not much traction for either side, the bulls or the bears, just a little bit of noise. And at the end of the day, everything settled. So inside, double inside day for that matter on the spiders, still way above our trend line. You know, this, in my opinion, is going to be the one to watch if this trend line ever does come back into play, either in pullback in price or sideways over time. The Dow and the diamonds, let's start with the Dow. Not so much an inside day, but still kind of building a little bit of a wedge here, coming from the south and coming down from the north. So a little bit of a wedge showing up there in the Dow. Nothing to write home about today. And the Qs gave back a little bit of a lot of the strength they had firing off some of the earnings they had last Thursday. The one interesting ETF sector of note is the Russell 2000, and for different reasons. Last week it was the laggard, and the laggard was having a very hard time getting back above this level right here, which was a very important support level, and then became resistance on these 2 days. So I had said that, you know, this was kind of the black child, the black sheep child, the stepchild, whatever you want to call it, the black sheep in the family. The price action absolutely bounced so hard off of the lows down here when it was looking pretty feeble, filling this, basically we could draw a line to show that it did in fact fill that gap back there. But boy, what a really nice move. So in the game of rotation, the S&P, the NASDAQ, and the Dow, rather quiet with some inside days, a little bit of give back, but not over here in Russell 2000 land. Small caps have been bouncing vigorously for the last 3 days and been bouncing technically back above to where they needed to be, which was basically this orange line. So these things went from not very pretty to really strong in just a matter of 3 days. So now we've kind of got all 4 ETFs lined up, continuing to show us that the path of least resistance is the remaining uptrend. And until further notice happens, or until some black swan happens in the middle of the night where we all wake up and the Dow gaps down 600 points, that's what we've got to work with. The market is innocent until proven guilty, to quote my friend Brian Shannon. But the big note, big change week over week was having these IWM Russell 2000s languishing on all of a sudden, bang, just prop up and got the attention of the market, technically right back in the zone where it should be, and you know, in all reality, not too far away from another possible all-time high in the IWM. So this one's been kind of a goofy one, but it did recover very nicely, I would add, on the last 3 days. Interesting, Nike did come through my washout bounce today off the heels of some pretty good earnings, and look at what they did. They just tried to wash out the stops below Friday's low, and if we look at it, yes, what a surprise, right? 15-minute candle. It all happened in the first 15 minutes. The power selling, the breaking down, the running of the stops, and the buying of back of the stock like it never even happened. These are typically handprints of HFT algorithm stop hunts when you see it all in the open like that. And taking it a step further, those typically do go on to do some good things on the daily chart when you have that giant rejection wick on the first 15 minutes and the price bounces right back up into the range. So a lot of weak hands were shaken out of Nike on the open. I just felt that was very interesting. All right, and what was the one more thing? Oh, the trade of the week. Trade of the week. GHL actually triggered this week. Kind of a short squeeze play in the financial broker sector, but You can see Holly the AI had it as a buy way back here. We had earnings, and after those earnings, came back and filled the gap perfectly. So we had a really nice gap fill, and then basically as it broke above these highs on that green line there, that's where the short level, 22% short the float on 27 million, started to do what we hoped that they would do, cover and move higher without too much volatility and fanfare. So that's pretty much what I got, what I'm seeing in the markets. Anything you want to add, Jamie? By all means.
Well, you know me, Steve. I mean, we pretty much see eye to eye on all of these things. And once again, Doctor, I concur.
Cool. All right. I'll give it back to you then. Okay.
Okie dokie. Hopefully you got eyes back on my screen now. And so, what are we going to talk about today? Well, just like anything else, anything that we do as human beings, whether it's we're going to go to work that day, we're going to go camping, we're going to go surfing, fishing, golfing, whatever. Well, you don't just jump in the car and go. You get all your stuff, you plan, you make sure you have everything. You know if it's raining or not, or if it's sunny. Those things are important, okay? And of course, they're important in the markets as well. So we have to talk about our expectations, which we constantly have to adjust. So what do I like to do in the morning to kind of get a feel of what might be in store for the market? And of course, I like to look at my compare count windows. And what I've done is I've already dropped these 4 little windows into the chat area, so you can look down there and see that cloud link. If you load that cloud link up, these little guys will just pop right up on top of your existing layout, and you can start observing them. Find a spot for them, resave your layout, and you'll be good to go. But what are these little guys doing for me? We've got 4 of them here, and really the ones I pay the most attention to in the first 15 minutes of the market are these 2 guys right over here on the right. These are looking at the bigger cap stocks, the mega caps, anything above 4 billion, 5.4 billion in market capitalization. So a compare count window allows us to set up 2 different events, and he or she or this little inanimate window here does exactly that. It counts every time one of these events happens. So these 2 right here well, they're all the same, but the 2 I like to focus on are the big caps, and it's looking at high volume selling and high volume buying in the first 15 minutes. And what we're trying to do here is get a read on what the institutions might be up to. Because the stocks that are exhibiting the really high values during this time period, typically, if they're experiencing higher volume for that specific time period, then the volume most times will translate over into the remainder of the day. So these will be some of the stocks that will be in play to the upside or the downside. We could also say that these are the stocks that they're going to have institutional buying and institutional selling. So after the first 15 minutes, I had these readings today. Pretty much 50-50, 51-49 here on this one, and deadlocked 50-50 here. So in the world of biases and looking at these things, unless it's above 55%, or we need above 50% for a relatively good bias. So anytime it's 51 to 55, it's an okay bias. When we get above 55%, well, the wind's blowing, but it's blowing very briskly. And then sometimes, maybe anywhere between 2 and 4 times a month, you'll see these guys just off the chart, above 60 one way or the other. And those are going to be the days where we get a lot of continuation to that respective side. So this is a great way to kind of gear yourself up. So when I saw these readings after the first 15 minutes today, what were my thoughts? Well, since we're in a perpetually up market, we're taking our pullbacks, but I mean the overall trend is up. What are my expectations? Well, the longs are going to be there. The patterns that I like to play, the continuations of the volume, they're going to be there. Now, continuation might be a little flaky, right? But I expect to be able to get in these positions, be in the money, and then make a decision. Do I want to try to hold it or scalp it? Now, based on my compare count readings, I know that there is going to be a little bit of an updraft, but And, you know, you better take your cookies when the plate's coming around. If you wait, might be crumbs when it comes back through. That's the equivalent of you being up 30, 40 cents and then being back down to your entry or flat. And that's what we saw in a lot of stocks today. So without further ado, let's go ahead and talk about Holly. And of course, these same expectations, you're going to see the same type of action in Holly. All right, whoops, let me get that out of the way here. And Windows, thank you for shrinking that window when I didn't want you to, but let me get it back here. All right, so Steve, are my windows coming through okay? Resolution looks good, or I should be.
Yeah, it looks like I see everything there.
All right, and even Mike can see. All right.
That's the real test.
I know. If Mike can see, everybody can see. It's like the old, what was that Life cereal commercial? And it was his name was even Mikey. Mikey likes it.
Yeah.
Okay, so Holly, very active day today, and of course I stepped on my little cheat sheet here. So, you know, of course, before I squished my notes, you can see here, Holly recap. She got a really great start out of the blocks, a couple of big winners, 17 trades, all long today, not any shorts firing. So we can see how Holly finished up today. Risk off 75 cents on about right at what we at 17 trades total. If we look at the strategy panel here and sort by trades, well, let's see here. There we go. We had 5 from Float On. Float On has been one of the top performing strategies for a very long time now. And I'm going to backtrack here because I was mentioning earlier, Steve, Holly's about to be 2, right? So we brought her online beginning of 2016. Here she is at the end of 2017, and boy, has our child grown up. You remember what it looked like when it first came online, how it functioned, things of that nature. So we've seen it grow, and it continues to widen the gap, or I should say, she continues to widen the gap between her performance and the SPY. And we've learned a lot. We've all learned here at Trade Ideas by watching Holly, not only how to better the product, but, you know, we're a bunch of older dogs. I won't say old, but older dogs. And guess what? Old dogs can still learn new tricks. It's just you got to have the desire to do it. But when you have something like this that you're shepherding, boy, it really is eye-opening. So what was Holly up to today? Well, we can see all longs. You know, she had one short strategy make the cut. Of course, it didn't fire anything today, and these 2 longs down here didn't fire anything off today as well. But other than just looking at, hey, how did Holly do at the end of the day, whether it's risk off or risk on, there's a lot of information to be extracted, what I like to call reading between the lines here. And this all circles back down, or back around, I should say, to methodology, right? Teach people methodologies, what to look for and how to react, and then it's repeatable. So if I just pull my little sheet back over here one more time, when we're talking about Holly and how to interact with her, I like to talk about things called risk on opportunity and then other things called trade arounds. Because as we're interacting with Holly in a real-time basis, you know, obviously, you know, these guys are going to pop out in real time as the strategy triggers. So we can see nothing, no trades from Holly until right at 30 minutes into the open. So when I double click here, what do we have right out of the bat? Right off the starting block here, we had this ADMS call right here. So the blue line here is Holly's entry, blue arrow here just indicating the 5-minute candle when she said get long. And you know, this is one of the animals that we see a lot. This one just boom, it goes immediately. You know, no looking back, no little pullback here, no hugging the entry line. This one's just boom, off to the races. Which, hey, if they all did this, we probably wouldn't be sitting here together. I wouldn't be telling you about this cool stuff because we'd both be busy ironing our $100 bills and, you know, picking out which island we were going to buy. But sometimes they do this, and it's always nice. Because number one, we've got strong statistical probability coming from this play. And that is the most important thing about Holly. It is her superpower. It's the ability to bring us statistical viability on each and every play that she produces. Float on produced this guy right here. So we can see float on coming into the session, 59.2% chance of success. Anything coming out of here also happened to be the most active strategy, 5 trades today, and slightly overperformed. And that's a good thing because these guys slightly underperformed.
We got a common question we should probably clear out, is the risk on versus risk off for some people who may not be familiar with those terms.
Absolutely. So risk off is simply Holly, the AI, obeying her rule set like you and I and everybody else does. Profit targets, stop losses. We also have a timed hold. Every one of these strategies is designed around an intraday hold time that you can see right here in the time stop column. So, big difference between what Holly took in on risk off, obeying her stop loss, profit target, timed holds. We've also given her 2 other reasons that she can exit a trade. So if we look right here at the exit reason, I can sort by that guy. So we can see she can also get out early using a profit save or reduce risk. The longer the trade is put on and it's not moving, she has the ability to go ahead and close it out. So we can see this one, ADMS, why did she get out? Timed exit. Of course, float on, we can cruise over here and see it's designed around a 60-minute hold time. So she bought it here 60 minutes later, which is going to correspond with the shaded area here. This is risk off. Every time we see a Holly trade with this dark shaded area, that's the time that she was in it in risk off mode. So she made it the whole time. The profit target did not get hit. The stop loss did not get hit. 60 minutes expires. She's programmed to get out, so that's what she did on the timed exit there. So anytime Holly gets out, you'll see the exit reason here, and risk off is going to be reflective of these reasons and prices here. That's why we also have the risk off column. So we don't have to sit here and try to calculate. You can see 81 cents on risk off, and had we held it to the close, this metric here is always going to fluctuate as if you had never covered. So this will go up and down. You can see max profit, which is another one of my favorite columns here. During risk off mode, it was up at most $1.11, and she took 81 cents out of it. Now risk on is just going to show us if we would have taken all of these trades and held them to the close on the group, we'd be up $1.69 or 1.69 points. So when we're looking at Holly's trades and analyzing them, we're typically going to have, on an active day, a difference between risk off and risk on. In other words, there's a spread. Now the spreads between risk off and risk on today weren't that big. On some days when the market really gets up and moves, or sometimes it just happens to be that a lot of the ones that Holly was in happen to continue on that day, we'll see a lot bigger spreads here. Now, interestingly enough, these are all the risk on prices as of the close. But if we look at max profit here, we're seeing some different numbers today. Usually things don't quite look like this. So let's go ahead and take a look at Zoma here. So once again, another one that Holly calls here. And by the way, I really like, I like this play as well from a human chart perspective. I like the fact that we know that there's a buyer in it. Of course, trying to buy something like this, unless you've got real precise metrics, trying to eyeball a chart like this is just kind of begging for a beating. But I like what happens when it gets up here and it does this little rest area type, consolidation, sideways move here. Lets me know buyers and sellers have kind of become equalized here. If I was going to trade this thing on a manual perspective, I like this as a risk area. But then when I see Holly call it out and I see this little pattern right here, I know right off the bat we've got that stat probability from float on, same guy that produced the prior two. And, you know, it's happened to be a little range break action right there that I like. So it makes me feel warm and fuzzy from a couple of different other perspectives as well. And of course, we just get that nice pop here. So why did Holly get out? Well, on this one, it's a profit save. So we can see this little shaded area here. You know, we can also see that risk on, she could have made a little bit more holding it to the close, but profit save, you know, going back to when we first brought Holly online in 2016, we didn't have anything like this in place. So what was happening? You know, we got so caught up on the real technical stuff and just bringing the AI online that we forgot a simple thing. Well, if you just have profit targets and stop losses and timed holds, then what's going to happen eventually is it's going to be up 50 cents on a position, but stop loss wasn't hit, profit target wasn't hit, and the timed hold hasn't expired yet. And in the meantime, it goes from about 50 cents back down to flat or below water. So you see, it doesn't make a whole lot of sense for an AI not to have those risk parameters in place. So we gave her the ability to get out of a winning trade early or get out of a losing trade early, which you saw a lot of reduced risk today, right? And it looks like she was pretty accurate on a lot of these. We're keeping her out of trouble today. But a lot of the times she'll get out on reduced risk and then the thing will turn and go back up, and that's what we call a trade around. So getting back to, you know, what is a trade around? Well, we had a couple of good examples of that today. PNFP, TG, and TGH. So let's take a look at those guys. PNFT, where'd you go to? Here we go. Okay, so this one, a little bit different of a story. Holly loses 10 cents on a reduced risk, which was a good call because look, it went ahead and went on down here and would have been a stop out. So she got out a little bit early because the trade wasn't working. Kudos to her. Saved a little bit of money, comes down here and hits the stop. So anytime we see Holly upside down in a trade, we can do the following. It's below the entry line, whether it's here, or anywhere up until it comes back up here and retest that area, because here's the thing about statistical probability. It's good for the entire day. So a lot of the times in these Holly plays, we'll see them hug the line for a bit. Sometimes they go immediately. Sometimes they don't. But in this case, we see one underwater, so all we have to do is come up here and right-click and use the same price, 65.20. Come up here, you set your price alert, and you notate it. You say if it goes back up there, I want to be alerted to it again. You can label it Holly TA, right? So if I pull my price alerts up, you can see I had three of them set today. This guy was the only one that triggered, and it was only good for 5 cents heading into the close. And the good thing about these guys is if they don't ever trigger, you don't ever get bothered by them again. But if they do go back up there and retest that area, sometimes they can present a little bit of opportunity. So, you know, underwater, it got stopped out, but on the second little attempt through this line, it hugs and heads higher. So just one more way you can use Holly, even if she's underwater on a trade, for that second occurrence through the price line, and sometimes those go quite nicely. Check out this guy here, RYTM, another Holly play. I saw it as it was bobbling around here. I set the price alert. It triggered, it worked, it hugged the line. Only would have been good for 5 cents, but it's getting in that habit, you know. So just make that a point for those of you who are premium subscribers. When you see Holly upside down on a trade, or maybe you saw, hey, she was in the money, now she's a nickel out of the money, set that price alert. Watch what that stock does, because sometimes it'll hug that line and you can actually get some price improvement, a better price than what Holly's taking on some things, assuming the pattern is remaining conducive and you feel good about holding the trade. All right, so that's what we call a trade around. But what about risk on, right? Once we've got a good entry from Holly, And let's see, it's this little guy right here is a perfect example again, Zoma. All right. So Holly on the Zoma gets out for profit save. Wasn't the timeliest of exits because she enjoyed the ride, and then right about here, you know, she's given back quite a bit. She gets out. She still makes 48 cents, which is nothing to sneeze at. But during the time that she was in that trade, there was a $1.41 potential on the table there. Now, this one isn't so easy to, you know, it's not like some of the ones we see, Steve, where it's just quite obvious that you should try to make more here, right? Because a lot of the times we'll see a nice little flat line like what we see here. So you're thinking, well, yeah, Holly's getting out, but look what it's doing. It's kind of risk, you know, it's a low risk. Now, of course, here, you know, it would have been a hard call. Why would you have gotten out here? You know, but we can also temper our expectations by checking out the dailies of the things that Holly, that we might be in and working, right? So we're getting this nice little ride here. Well, all we do is we click over here, check out the daily, and go, look what's happening. You know, Holly calls it down here at 25. If, you know, if I'm just eyeballing this chart and trying to figure out where it might bump its head, well, you know, this stands out pretty, you know, you don't have to look very hard. And then, of course, the wick of the prior day doesn't even get all the way up there and then peels back. So sometimes that can help us figure out if, you know, should we stay in it or exit with Holly? Because sometimes we can make something between the risk on and risk off spread or the max profit column, you know, almost a whole other point between 48 cents and 141 here. But we can always look to the daily to try to help us get a little bit of guidance there.
And there was a couple that we liked that we wanted to maybe demonstrate that heart function on.
Yes, indeed.
SGY was one of them. ADM. SGY was almost a trade of the week as well, by the way it was shaping up, and it was kind of funny to see Holly take that trade today, but it was on the short list. But that's a nice looking daily chart when you get to the daily chart portion of it. Here we go.
Right. So we take the trade with Holly, or it's brought to our attention because of Holly, and we're going, okay, how much juice could this thing have in it? Okay, and of course, we got this nice little consolidation area and a boom. Hey, look at me. I'm all-time highs, and I'm just breaking out, right?
Not all-time highs, but 52-week highs, yep.
Oh, yeah, you're right. I'm sorry.
Yes.
I'm so used to dealing with those that I'm just like, oh, it's all-time highs. But yes, a nice little break here. And if we just kind of, you know, put that into play there. Let's see, there we go. Okay. So, you know, we're into this territory here. So a nice little break out of that range there on a 52-week high. So this is definitely one you might want to keep your eyes on for the morrow. So we've got this nice little heart functionality built in now. So we just go click, and you'll see the heart is now active. And so later on, when you go to your liked symbols, you'll see all those symbols populate into that area. And you're right, there were a couple of these. SGY was one of them, TGH. And ladies and gentlemen, this is using Holly, the things that were brought to you in the intraday arena. You know, peruse all of these things, and then you'll have things to carry forward into the next session, which could become very valuable as the day unfolds. Here we go, kind of more of the same. Something to watch for is, you know, well, the tops of these candles, and of course the guy up here. Steve, your comments?
I was typing a response. My comments regarding that flag pattern there.
Yeah, is the TGH, right?
Yes. My comments were that, you want to remind me what my comments were when we were speaking earlier?
The reason that we're going to be hearting these to keep an eye on as we move forward is simply because of what shape.
Beautiful flag pattern. Yeah, it's a beautiful flag pattern. Gapped up, kind of breaking out of that little down wedge flag on the daily. It could be the beginning of something interesting, which is completely opposite from the Zoma that Jamie was showing earlier, with a daily chart that just goes one green candle and one red candle in the middle of a range. It's not really what we're looking for, but TGH I never would have seen on my radar had Holly not called it out. And then the next step is to put the I like it, the heart on it, and that throws it into a watch list of stocks that we like that we can keep an eye on.
Mm-hmm. I'm just going to pop back over to this SGY real quick. And not really a whole lot of, if we see Holly getting out once again in the risk-off area, then we just get a lot of sideways movement here. And of course, that nice little wiki there is probably what she was getting all nervous about. But there's one more here to keep your eyes on, or to heart, so to speak, and that is this guy too. ADMS, seeing the same type of little breaking out of that channel pattern here.
Little turtle head coming above that breakout. We look left, there's a little bit more congestion, but still, it's a nice looking chart for the short term.
So, just from Holly plays alone, we got 3, I'm liking all 3 of these. That way I'm not going to forget to keep my eyes on them in the next couple of sessions. All right, so let's see here. Not really a whole lot of other things to talk about. I mean, let's not just talk about the winners. Let's talk about the losers and how Holly handled her risks. We can see, she exited that one early, 18 cents. Had she stayed in it, would have turned into a 60-cent loss. 38 cents here, saved about a penny here, about a dime on this one, 2 cents, 2 cents worse on that one. So, pretty even distribution.
There was only one stop hit today, and that was definitely saving you money if you adhered to that.
Yeah.
Stop hit is one of the, well, it's the only one out of the 4 really that I don't like to argue with. The other 4 can be at your discretion. Do you want to stick around, or do reduce risk like Holly? Reduce risk means the trade is just kind of going back and forth and not doing anything. So the AI is going to get out of it and not stick around, take risk off the table. Profit save, that's usually a good one because it means that the stock is in the money, but the pullback is a bit too deep for the AI, so the AI uses what we call a trailing stop. That could be, using your own discretion. Time stop, just because the clock hits 60 and the time is expiring and you look over and the market's ripping and the sector is ripping, probably a good discretionary decision to maybe stick around and see what's happening if everything is still lining up. So my point is there's only one reason for exiting today that said stop hit, and I just happened to notice that if you had not adhered to that, that's the one I don't like to argue with or don't like to override or make discretionary decisions. If the AI says stop hit, probably best off following stop hit.
Right, and I'm glad you brought that up because I was going to talk about TGH here for just a second, because this is typically what we'll see a lot of times in a risk on that is looking better here. We see 15 cents risk off, 50 cents risk on, so we got a 35-cent spread in there. And in the heat of the moment here, we see Holly getting out, right? And we're thinking, yeah, you got this nice tight consolidation. The buyer brought it up to here. Now they're equal. I see Holly getting out, and you know what? I think it's probably going to head higher. And then this one threw us a little curveball. Whoosh! Almost went down there and tickled the stop. So keep in mind that when we see things like this as well, this can end up becoming what we call a trade around. You're like, hey, man, it almost went down there and triggered. I've seen this before. So it didn't trigger. Now it's marching back up. So, once again, comes and tests that line again and then goes. Just want to remind everybody that statistical probability is good for the day. So sometimes you are given the opportunity to trade a stock multiple times. All right. So I want to move on to another thing that we always do, and that is, okay, we've got Holly, and she's a great statistical model kicking out real high probability plays, just another source of high quality information. And based on what we were talking about earlier with expectations, meaning there's going to be a little bit of lift, but continuation is going to be a little bit iffy, right? And of course, if we look at Holly's risk on ebb and flow on her P&L, we topped out at almost 3, and then if we didn't take the cookies off the plate, look what happened to her P&L. Whoosh. And then she recovered a little bit, all right? But we saw that that theory kind of hold true with Holly's P&L. Now I'm going to pull over a top list, which I just threw a custom list together because these are the ones that I pointed out today, and I like to tweet these out, right? So in real time as the little break is occurring. But I just wanted to put them all on a list today so that we could see these were all long range breaks today. And we can see this is the position in the daily range. So out of how many here? 1, 2, 3, 4, 5, 6, 7. Out of 7 of these that I found today, and I try to be extra picky too, because it was just, you know, when you see those 50-50 days on the compare count windows, it's like, okay, you know, don't go hog wild here. You know, try to be very, very selective. So out of 7, I think only 2 just barely got in the money and rolled over, and everybody else presented some nice profit opportunity, right? So we can see here, this little guy pecked once, took a little bend down, and then pecked again, and then finished higher, right? So definitely a stock that we could see the buyer. We see this little consolidation area again. We see it get breached 1 time, 2 times, and a finish higher, right? Of course, we had AYX do the same thing as well. Came up here and peaked for the first time right here. Took a little swoon down, which is very typical of what we were seeing today. Finished higher, right? WAT. Matter of fact, I think this one, Ollie traded this one the other day, right? Yesterday?
I'm not sure, but
Or
I
Friday?
don't know why I feel the need. Can you back up to AYX for a second? I just want to explain something. I was at go show the daily chart, please.
Sure, sure.
I was at a dinner party with somebody. You can scroll back more because there's a little bit of history here.
Okay.
Yeah, perfect. All right, so right about where the X is, I got a call from a friend of mine, or might have been, yeah, it was right about the X.
Okay.
And he said, this is my company, and I've got some shares, but my lockout period isn't until like late November, late September. And I said, oh, okay. Well, what should we do, Steve? We don't know anything about this. He said, well, looking at that chart, it seems like you should be able to get out at 18. You had that big drop down and then a nice big spike up, and here we are now. So the price action is showing you pretty solid floor around 18. Now, here's the funny part. Here's what I said. What you may want to do, guys, is go ahead and just sell half at your lockup expiration. That way it takes that nagging, urging feeling, I've got to book the profits on this thing quickly before they disappear. When you sell half, you kind of satisfy that demon, and then you maybe let the other half run, and if you believe in the company, see how it goes. Now, this is a new issue. This is an IPO. This thing's kicking butt over Apron. It's kicking butt over Snap. I told them this is one of the more healthy IPOs I've seen in a while. So, you know, maybe consider selling half, but you should be able to get out above 18. I saw them for dinner on Friday night, and they looked at me and they said, Steve, we wish we would have just sold half and listened to you. I just wish we would have just listened to you. So, you know, there's a perfect example of a real world story of where I say sometimes if you're not quite sure what to do and when to do it, selling half usually makes the demons go away. And so you see the price action now, and now they're just kicking themselves saying, gosh, I really would have wish I had listened to that advice, but we didn't. But we're out and we're happy, but thank you.
That's
so anyway,
the guy. He's only got 10,000 hours of chair time. Why would we listen to him? Ridiculous.
Yeah. So I just thought that was a great real world example there of how that can work in your favor sometimes.
It is, and I'm glad you said that because the same holds true when we're in a Holly trade and you see her getting out with risk off. Do half until you get used to it, right? You see Holly getting out, go, okay, I'm getting out a half of mine with Holly on risk off. If the chart looks conducive, I'm gonna hold the other half for risk on, and I'm gonna set my stop loss for break even. You feed the greed demon, you feed the fear demon, you've given everyone their piece, now you can move on, right? Simple as that.
Go ahead and finish your thought. I'm sorry about that, Jamie.
That's okay, that's okay. What you will notice on these plays is when we look, they're all going to be at lifetime highs, kind of what I was getting confused with earlier, because I'm so used to dealing with these guys. Now, some of them will look like this, but then accidentally, you might find some right as they're poking their heads above. So these are also going to be guys that I heart because want to keep up, right? Look at what WAT's doing. He expended a lot of energy getting up here, but now he's kind of looks like he's finding a floor and he's continuing. So if you see a nice little tight intraday setup tomorrow on what, well, he's got nothing for him to bump his head into in the short term. Same thing, this guy out of his box already, don't really want to heart him. This guy would have been nice if it would have traded through there, but didn't happen, and so forth and so on. Deere, the big tractor company, just getting out of this horseshoe type pattern here, might be one keep an eye on. You see a good intraday setup on Deere tomorrow, nothing for it to bump its head into. So out of about 7 of these guys today, you would have had the opportunity to get into the, even on Deere here on this range break, you're in the money. Second part of the equation, what do I do with it? And of course, when you see these guys too, depending on your time frame or your horizon, if you're a swing trader, could be a good candidate for a swing trade. Maybe not, but you'll definitely want to consult the daily for that type of information. Square was like the worst one. Barely got out and then immediately slithered back down. But all of these other ones, some pretty good opportunity.
Just want to remind you guys that have the premium account subscription, the price alerts are your friend. You should
to avoid confusion, let me go ahead and delete those guys. Now all we've got are my shorts from last week. And we can see the days that the alerts were set and when they fired, right? And the reason I wanted to take the time to show you guys these is because now on those upside range breaks that I was looking at today, finding Watt and some of the ones we just looked at on the top list, I'm using this guy right here. Turbo up family, no resistance, so they're all doing their thing at all-time highs. But how did I find, where did these guys come from last week? And the important thing to point out here is look at what they're still doing, all right? And that was on these were set on the 14th and the 13th. You know, here we are, the 13th and the 14th right here, swoon down back up here. These guys are still down. They're not recuperating. That's because when we start looking at these guys, what you're going to notice is it's the exact opposite of the chart where everybody's at all-time highs. These guys have broken down into what I like to call the abyss, right? So if you're finding them as they're breaking down, kind of just exactly the opposite of some of the things we were looking at to the upside, same philosophy holds true, because it's time to get prepared for the downside. Might not happen for 3 months, 6 months, whatever, but if you get into the habit of just going, okay, I see the setup, whether you take it or not, it's training, right? It's training like any other athletic event. You're not just going to go out there and try to run a half marathon. You could do it, but you're going to be in a lot of pain, and who knows what's going to happen. It's not going to be pretty. But if you start getting your mind prepared for what's to come, it's not a matter of if, it's just a matter of when. I'm not saying the market's going to crash anytime soon, but these guys are already showing up. You can already start hitting some of these guys and profiting from them. So why not do it, right? So just wanted to point out, you know, EXXI, broken down into the abyss, no recovery. This guy, couple, you know, in this little area right here, I'm like thinking to myself, well, you know, what's the harm, you know, on a low risk if it's looking real tight on the daily? And then of course it gets down here and it penetrates again, forming a little base camp, not really burning, you know. Now this is the new level of resistance here, right? So just want to keep going through these guys. This is what I like to call a gutter rat. It's an IPO. 1, 2, 3, 4, 5, 6, 7. It's a 7-day-old gutter rat. all right? And of course, might be shortable, might not be shortable. They start shorting these things pretty quickly now. So just one to keep on the radar. Check out whether it's shortable at your broker dealer or not. Shield. Wow, how many times is this now? Is it going to be the third bankruptcy for Sears? Maybe they'll go away this time. Who knows? But you can see, you know, these things are breaking down, and when they do break down and they're at all-time lows, this little guy will tell you about it. He's just the exact opposite. So obviously, we're not getting near as many coming through here, but they're starting to show up, whereas before there were hardly any. All right. So, you know, start paying attention to these guys. Get used to identifying them. Whether you play them or not is up to you. So some people don't like to go short, but you know, you have to think about it from this perspective. Okay, when the market is trending down, you're going to spend all your time trying to play bounces or trade, you know, ETFs or you know, whatever. So as you know, as long as your only account is not a IRA account, then it might be time to start your training. And what I'll do is I'll drop both of these guys into the chat area, the upside and the downside as well. And if you haven't been watching them, load them up and just start observing what you see coming through here. And of course, to keep the $1 stocks and things like that out, I want to make sure that we're looking at least at things above $6. Give me 1 second here. Okay, and I've got that set already. So I'll drop these into the cloud.
All right, while you're doing that, Jamie, Christopher was curious, did you make any changes on your compare count window? He had a little bit of different readings this morning, I think, than you did.
Well, if you didn't see the 50-50 and the 51-49, then you don't have the same big caps as I do. Because I haven't
Maybe
changed.
it was broken down by a different market cap. He's got 4 different market cap segments he's broken it down by.
Right, hold on, I want to make sure I'm not grabbing the wrong link here. Okay, so this is for the downside.
Christopher's using the one that you gave out in August, and David also said that he felt he had some more green this morning, so I'm not sure.
Then I dropped that cloud link also. It's the first.
Go ahead and grab the new.
So grab that guy, and you know what? Before we kick off here, I'm going to load it up and just verify that it is what I said it is, just to be on the safe side. Okay, so let me grab that cloud link back out of here, and I'll just confirm, make sure everybody's getting the right candy here. Okay, so that's what's going to pop up. Let's take a peek here. We got red. We got the classic formula. Yeah, that's good. We got green, and we've got the classic formula. So that's the 4 bill. This should be the exact same, just at a market cap of 5.4 billion. Yeah, so I don't know what you were watching before, or maybe they got accidentally modified.
Maybe it was a different time of day. Maybe you switched and came back to them. That's always a possibility. If you leave and go to a channel and then come back 10 minutes into the day in a big period of buying, you guys are going to have 2 different readings because Jamie's let his run from the opening bell. If you guys switch around and then they get reset, that's always a possibility.
Yeah, and you know, I wouldn't go trying to reinvent the wheel here. If you watch just the 2 big caps,
okay.
I take the readings after the first 15 minutes, I notate them, and then I don't really watch these guys anymore. I've tried different things, experiments. I never really found anything useful. Just really pegging what's going on with the high volume selling and buying in the first 15 minutes is where I found the most use for those guys. All right. Okay, so all those windows are now in the chat area. Grab those cloud links, load them up, and I guess we're just about at the end of the hour here, Steve. So,
yep.
time to bring in Scott and let him tell you about the discount codes that are currently available.
Yeah, thank you, Jamie.
Sure.
Couple items before we get on to the discount code. If you're an Interactive Brokerage user, find out about using Brokerage Plus and Auto Trade using Trade Ideas. Manage your account directly from Trade Ideas. Automate the strategies. Email info@trade-ideas.com for help setting that up. We also have a podcast. Make sure that you are a subscriber. Just search for Trade Ideas Podcast in your favorite application that you use to listen to podcasts and make sure we're added. We had a good one up on Friday, so don't miss it. The code today is Holly Snap, and that's good this month. It saves 15% off your first month or year of Trade Ideas Standard or Premium. You can also use this to upgrade from the account management section from Standard Trade Ideas to Premium. Remember, it's all caps, it's case sensitive, so you can also download this slide and some other ones on a PDF by expanding the Handouts panel in your GoToWebinar interface. Just click on Handouts, expand that, download from the blue link. And if you have any questions, email us info@trade-ideas.com. That is the best help email to send your questions to. You can also reach out to Jamie or Steve directly using the emails on the screen there or that you downloaded from the handout. And follow them on Twitter. Steve is Today Trader, Jamie's @QuantBot, and our CEO is Trade Ideas 1. Thanks, everyone. The recording will be up later on, and you get an email reminder where to find it. Thanks.
All right.
Jamie.
Okay,
Thanks
for attending, everybody. Steve, we'll see you on the flip side.
Next time.
Later on.
Bye-bye.